Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Deryck Janse Van Rensburg from Anchor Securities, Thamsanqa and Netha from Shiloh Capital. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time. Deryck, let's start with you. Let's start with Vodacom. Two parts to it. I thought nice numbers, lots going right for them. A lot of talk about the please call me. I was having a look. They've got provisions. They've got a current provision of 800 million. They've got a non-current of 1.6 billion, which they state for ongoing court cases. So I think we can park that aside. Your thoughts on the numbers from Vodacom, which has had a good year so far?
Yeah, I think it was actually quite a decent set of numbers. Obviously, the big overhang have been these provisions, which we've been waiting quite some time for. And obviously, seeing some end in sight, particularly with the Please Call Me case, that bodes very well to kind of close the chapter on this and to kind of rely on the company's organic earnings going forward. So I think a decent set of numbers. I think the telcos are quite well placed in terms of how they've been performing through the course of the last 12 months. And it's all about how they innovate from here. So I think the numbers are good. I think they've got quite a nice foundation to look at exploring other options, online payments, payment systems, starting to diversify some of their income base. But really a good set of numbers. I can't fault them. And I think, we probably see the share price continue to kind of grind higher on the back of, more data spend, etc. So I think not too bad, and I like it.
Tell me, data spend, but I got to say the fintech really working. And I was, to be frank, never very impressed. I thought the telcos were getting into a crowded space, but it is working for them. Of course, they've got the history of M-Pesa, and I mean, all over. Egypt doing great. I mean, left, right, and centre. Your thoughts on Telkom? Vodacom.
Yeah, look, I think the keywords are value-added services.
Yeah.
So I think that's where a lot of the money is coming from. With the data saturation, you'll have growth in fintech, financial services, and that sort of mobile money and related activities. I think a large portion of revenue is going to come from there. 33% in HEPS jump is quite high. So they're doing something right. I think they've refocused on the core business and moved away from the distraction of the settlement.
Yeah, absolutely. And it's the value-added services, because ain't no one making phone calls anymore. That is old tech. Tell me, let's stay with you. Let's touch on Telkom. They had an update coming through. Giant increase in HEPS. Stock up 6% on the news, on a stock that's been doing quite well as of late. Although last couple of, maybe October, it's been under some pressure. Your thoughts on Telkom? I mean, we've got a fairly burgeoning little telco sector here, and they all are doing well, and Telkom's looking to double HEPS on its trading update.
Yeah, I think it's starting to compete. I think they've unlocked a lot of value in asset sales, data centers, masts, and that's sort of starting to show. So they're more nimble. And the PCX, I think, acquisition has added a lot of value to them. I think the issue is the cost of towers. Monetizing their towers and managing their costs, I think, has helped them considerably. I think they'll continue to compete with MTN and Vodacom. I think the suffering brainchild will be Cell C. So they have the ability to, as we said just now, value-added services as well. So I think they're going to continue to do well since they've unlocked that tower situation.
Absolutely. Deryck, for you, Telkom, I mean, as I said, all the telcos have had a good year. We've got Cell C coming to market maybe later this month, but that Telkom update was giant. There's been some processes in the background, SwiftNet, etc. Your thoughts on Telkom?
Yeah, so they've always had this underpin of the tower business, and obviously how they unlock that to kind of create a more nimble balance sheet per se. So I quite like Tommy's experience there where you talk about value-added services. I think if you kind of zoom out and you look at the sector, Vodacom, MTN, Cell C, Telkom, these are companies that are sitting on massive databases of clientele. And all it is really how do you unlock further revenue from those databases that they've built up over the years? We know the world's evolving. Phone calls are something a little bit of the past, lots of WhatsApps, lots of data usage. Fintech is a big story and how you can mine that within the context of your client base when it comes to all the telcos. So, look, I think Telkom are slowly positioning themselves into a more nimble state where, you unlock some of that property value in the tower business, you start to free up the balance sheet, you start to think about how you do fintech type services that can add value to clients, and it puts the company in a different space. So I think they're doing all the right things. It's been a good year for telcos in general, and it's that value added service that really has kind of delivered a lot of the earnings when you look at all the telco companies.
Yeah, absolutely. And there it is again. It's the value adds. As you said, we've gone way beyond voice. Another set of numbers, Deryck, Robex, HEPS was down almost 15%. The stock is up a few percentage points today. I've always kind of liked Robex. They've got the Sanrail contracts, and Sanrail is a state-owned enterprise that does broadly work. They've also got some operations in Australia that are doing fairly well. Robex, for you, the numbers and what is now, we used to have a giant 20 years ago. There was a ton of construction stocks. Now there's not many left. Your thoughts on Robex?
Yeah, so it is one of those few that are kind of left in the sector that keeps on kind of delivering decent growth. I think that the numbers were all right, kind of guided to. I think that the business is well placed. We do need some kind of government expenditure when it comes to road builds, etc., to really get them going. And on the other side of it, they've also got some assets and things like Boba. If they can get a good price for that, you might find that the stock can have a once-off decent uptick in that regard. But I think, we've been guided to the numbers that we see in terms of where to from here. I feel like it's not kind of a big table thumper that it's going to run away to the upside. We did see this at one point up at 58 Rand a share, but just kind of assessing these recent numbers, I think it's going to take time, securing some certain contracts, etc., delivering on projections and securing order books to deal with, expectations when we talk about HEPS. I think it's a slow grind for them looking forward in the short term. And you probably want to just kind of sit on the sidelines and be patient and wait for those announcements as they start to secure future contracts. So guided to the numbers, nothing exciting there for me right now at the moment.
Tommy, for you, because it is also, I appreciate that they're building roads in that state. But we are in a 1% growth economy. Not easy. Your thoughts on Robex and the numbers?
I think, unfortunately, they are a victim of infrastructure policy in South Africa.
Yeah.
If the state, as they've mentioned previously, are really going to take on a lot of infrastructure burden and sort of start pushing that narrative and invest in it and drive investment in those kind of projects, this stock is definitely going to do really well. I think, unfortunately, at this point, it's in the wrong part of the construction cycle. There's very little activity happening. Margins are squeezing, cycle is bad. So I would say, even though they do have a healthy order book, you still have to construct and build profitably.
Yeah.
And therein lies the struggle. So it will come down to really the government of South Africa and related parties putting on the table a sound infrastructure, call it aggressive infrastructure plan going forward for a stock like this to really be a great.
Yeah, and I like your point on the order book. Order books are great, but you've got to deliver, and then you've got to deliver with profit, which is not always quite as easy as stacking up the order book. Tommy, if we stay with Shoprite, trading update, I thought a little bit modest. On a big update, it is red. A question came through a little while ago saying, Shoprite, should I worry about that update? They're still growing. It's just, I suppose it's tough out there. I don't know how much it's maybe Pick and Pay and Boxer coming for them, but it is also a consumer concern. We see it in the clothing retailers, although food is a slightly different story. Tommy, for you, the Shoprite update, still a stock worth looking at?
Yes, it will always be a stock worth looking at. I think they're great operators, which is the upside that they have, and they are good operators across the continent. However, I think Shoprite is now sort of an index for consumer pressure. So if they're sort of starting to have margins that are being squeezed because consumers are not really going into their stores, it's a broader view of the economic situation of the consumer rather than necessarily their ability to run a good company. So the upside is you know they are seasoned operators, they know what to do, they know how to profitably provide consumers with goods. The issue is, can the consumer afford it? And so Shoprite, in essence, is an indicator of that. So when you start seeing those sort of margin squeezes, these sort of updates, it's an indication that there may need to be some kind of adjustment for the consumer. And what we found is often there's some, not a high, but some correlation between Shoprite squeeze and interest rate cuts. So you might see some activity around that as well.
Okay, yeah, of course, and they commented inflation for September, which was supposed to be, was actually at zero. I mean, the food inflation has largely vanished. Deryck, for you, Shoprite, if Shoprite's having a tough time, know that it is very tough out there, I suppose.
Yeah, look, I think there's always been very high expectations for a business like Shoprite. I think if we zoom out over the last 12 months, we can kind of all agree, just looking at some of the other retail numbers out there, that they've certainly been garnering market share. I think Checkers 60/60 has been a great success for them. So there's been a lot that's gone right in terms of how they've delivered their numbers over the last 12 to 18 months. So the expectations were set for them to kind of beat what we kind of working off in terms of what we saw over the last 12 months. And your point, rightly so, they still grew. It didn't grow at the pace that the market would have liked. And it does bring about certain concerns around consumer behavior, with inflation sitting where it is. And if you look at that inflation-linked basket coming down. So, all the stars seem like it's lining up probably for an opportunity in my mind, but it's going to be a bit of a slow turnaround. And as Tommy alluded to, I think we do need to see broader macroeconomics play in favor here, where we do see further interest rate cuts, the consumer feeling a little bit more breathing room, a little bit more spend coming to the fore. So it's been a tough time over the last 6 months, I would say. Still growing, but we actually need the backdrop of lower interest rate environment to really ignite some consumer spend from where we sit at the moment. But certainly a great business. If we do see a little bit more downside, probably offering a buying opportunity and one that you want to kind of put in the bottom drawer.
Yeah, absolutely. We've got another MPC in November if we get a rate cut. If we start getting some growth, Shoprite is undoubtedly a winner there. Let's move on to some of the questions coming through. A stock I used to watch a lot of, but I've decided that fishing is not for me. I don't know if it's on either of your radars. Deryck, Oceana, to me, it takes the cyclicality of Astral and seems to just square it. Fishing stocks, Oceana, question coming, is it worth a look for a portfolio? Certainly, I don't think it's a bottom drawer stock.
No, I must be honest. I haven't actually looked at Oceana in quite some time. I think, a lot of the growth has come out of a lot of the offshore market space. So that's kind of where their attention's been for quite some time. So thinking about a stock like Oceana, there's all sorts of regulations and hurdles and, short-term issues that they've got to deal with. I think, again, probably a function of, the retail sector and where we are as a consumer. In terms of this higher interest, it's a little bit lower now, but high interest rate environment, consumers feeling the pinch, so margins are cut down. I haven't actually looked at the business quite closely in quite some time, but certainly not one that I've looked at and looking to buy in the near term.
They had a benefit recently. Peru, some story, fish oil prices went up and they were booming, but of course then Peru comes back online. Tommy, is Oceana can interest you in a fishing stock or not so much?
No, so ironically, I'd be if I was a food group, I'd be looking at it as a diversification sort of acquisition. I don't know if necessarily as a single product grouping you can really impact the market meaningfully. I think if they were part of a more diversified grouping of food producers, I think they would have some value. Right now, at this point, I think it's going to be very difficult for them to, on that sort of single vertical of being seafood-based sea producers, to produce value. That kind of industry, as Mr. Van Rensburg rightly said, there's a lot of regulation. There's a lot of sort of hurdles you must get through, and those typically increase the cost of production. And you're competing with other proteins, poultry, which has a much lower hurdle, beef, and so on and so forth, chicken. So you really need to consider what the value is, what are the value products. And I think they would be more, if they were to look at some M&A activity and partner with producers and become a more part of a more diversified group, I think there would be value there.
Yeah, I'd actually like that idea. I hadn't thought of that before, but it is. I mean, it's deeply cyclical, and as I said, I mean, chickens is tough. Fish is even. At least the chickens, you can, where they are. The fish, you got to go and find them. Question coming through around Afrimat. Seems to have turned the corner, worth looking at for a long-term holding. Tommy, for you, Afrimat, they're still digesting Lafarge South Africa, but they do seem a little bit further down it. They've got their challenges with their anthracite. But your thoughts on Afrimat?
I think they're through the worst of the commodity construction slump. And I think, it really comes down to the resilience of the balance sheet and how they manage it and how they execute on that over the long term. I think they will continue to make money from traditional aggregates, bulk commodities, industrial metals. I think the demands for those sort of things continue to hold. So I think over the long, if you are looking for a long-term compounder, steady over time, has the right section of the construction commodities, I think it's a good stock.
Deryck, for you, some Afrimat?
Yeah, look, I mean, if you just look at the business and what they've achieved over the years, you've got to salute management.
Yes.
Whenever you look at a company that's growing by acquisition, you're not going to get them all 100% right from day one. And Lafarge certainly was something that just took a bit of time to digest. I think that's probably the best way to put it. And there was a lot of macroeconomic influences that certainly didn't translate into short-term profitability, let's call it that. So they seem to have done that. The recent numbers indicate to me that there's probably a base in the share price. And if you just look at that share price performance over the last 5 to 7 years, I think it certainly is giving you an opportunity to start building a position. Again, not going to run away sharply to the upside. I think, probably trade in a range between this lower 40 Rand level up to around 48, 50 bucks. But I think they're going to be well positioned when they start to report the next set of numbers and thereafter. And this is probably the time where you want to start building a position and slowly chipping away at those low 40s. They do have that leverage side of the business with some iron ore exposure. So if iron ore prices do start to move in the right direction, happy to be buying and put it in the bottom drawer. I like the share a lot.
Yeah, and it is great management. You don't get 10 out of 10, but if anyone can get that Lafarge working, and so far it's looking good for them. Deryck, staying with you, question coming through. I hold the JSE, the stock, and should I worry about the Competition Commission investigation announced on the weekend? And then the viewer sent more details to me. I'm holding it because bull markets are good for brokers and exchanges. Deryck, the Competition Commission, I mean, if anything, it's going to be a process. It's around the A2X, the JSE. I mean, certainly bull markets are good for exchanges and brokers.
100%. So as long as you've got a market making new highs, regardless what's driven it, in this case, very much driven by resources, you're going to get activity. You've seen some of the numbers. You've seen what things like easy equities are doing out there. There's a lot of transactions happening. So the JSE bodes quite well in this environment. And typically always being quite a decent dividend player. So quite a nice yield underpin under a stock like the JSE. So an element of safety there. So provided we continue to see strong markets, I think it's going to be well placed. In terms of the Competition Commission inquiry, again, as you say, it's a process. I think there's got to be, an investigative process, an outcome, and who knows what that outcome may be. But at the end of the day, I would imagine that when we start to see the next set of numbers, there would be a bit of a provision. The market anticipates it. It gets into the share price quite quickly. I'd be focused on watching what markets do. If they continue to make new highs, trading activity continues the way it is, then it's a good share to hold.
Yeah, I like your point. I mean, it gets into the market, it gets into the news, and everyone's sort of comfortable with it. Tommy, for you, the JSE, if we take the Competition Commission, I mean, as I said, it's going to drag out, but it's kind of out there now, and this is a stock that benefits from these highs.
Yeah, I don't think there's an existential threat to the stock exchange, but I hold somewhat of a contrarian view in that I think the new and upcoming stock exchanges, especially if they can crack the code with the SARB around dollar-based exchange, I think the JSE is going to see some trouble there. I think they need to really begin to innovate, look at more sort of platforms or way of trading, adopt, for example, the crypto side of things as a trader, as a settlement and market, adopt more technology, and look at challenging the Reserve Bank around dollar-based listings, attract, call it miners, as much as the TSX and the ASX sort of attracts capital from miners or exploration investors. So I think they need to start innovating in that way. I think if they don't, the likes of A2X and Cape Town Stock Exchange may out-innovate them and attract new pools of capital and force people to go to those areas to raise money. So I think I have somewhat of a contrarian view around the JSE over the long term.
Yeah, and I take your point. I mean, absolutely, and maybe new CEO stepping in the new year, Valdine ready, some innovation. We need to go to stock picks quickly before we do. Question around Optasia. Only got 14% allocation, but it hasn't run that much from the 19 IPO. Should I buy more? Tommy, Optasia, is a stock you like? Would you be looking to up allocation?
No, typically wait and see. I want to see how you perform over a couple of reporting cycles. I understood it's the business is largely AI powered and the resources line up with such and the future of technology and how we're going to look forward to. But at the end of the day, we want to see the rands and cents. We want to see profitability. We want to see dividends. We want to see capital growth. So let's wait and see. With 14% allocation, that's already quite sizable. Yeah. So I would wait out to see.
Okay, let's go to some stock picks. Dick, we get your take next time. Tommy, Airtel Africa, London listed. Your pick this today.
Yeah, so they've recently turned a profit. They've started readjusting themselves, making money. The fintech surge has really helped them go forward. They're in 14 African countries, so they're well diversified. And I think there's a strong future for them as a telco in terms of growth and in terms of return. The competitive landscape is not as hectic as it was before, but with a market cap of around £10 billion, I think the stock is sizable enough and liquid enough to meet its growth expectations of a PE of more than 25.
Yeah, I didn't notice it was a 10 billion sterling company. Deryck, your pick is Harmony. One of the questions was gold's on the move again, preferred stock, a gold miner. Gold's what, 4,080, there's about. Moving again, and Harmony's the one you like.
Yeah, look, I mean, last week we saw a bit of risk off generally in markets. And, as we kick off this week, we're starting to see some risk on and we're starting to see these commodity prices move up. I know we've had a big run in gold and some of the other underlying commodities, but I'm always mindful of never trying to call a top in anything. So, gold kind of topping out recently around 4.4. I think a 10 to 12% pullback was actually quite a healthy pullback in terms of what we've seen in this gold trend. So, provided there's continued risk on, I think that there could be a bit more in the gold price. And, recently we did see Harmony peak out around 380. down to about 280 and starting to move in the right direction now. I think it should start to resume that run back up to 380. And I quite like the copper acquisition that they've recently announced. I think that gives it some kind of an underpin. And I think it also gives it an ability to diversify their single commodity exposure into other commodities with the profits that they're generating now. So hopefully we see some good, strong operating updates and some positive fundamental news as we sort of track into the end of the year and early into next year. And let's keep an eye on the gold price. So I think it should hopefully retest its recent tops.
Yeah. That's all for Stockwatch today. Thanks to our guests, Deryck Janse Van Rensburg, Anchor Securities, Thamsanqa Netha from Shiloh Capital. Don't forget, tune in tomorrow at 5 p.m. We'll be bringing you the JSE's Stock Pick event, where you'll get inside analysis on some of the stocks that are catching the eyes of the investor community. That's right, here on Business Day TV. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.